Hello everyone, good morning and welcome to today's morning report with me, Richard Perry, Market Analyst at Handtech Markets for Friday the 9th of May. The European session has started off with a slight amount of caution. Certainly the indices are lower in the opening exchanges, and there's been a slight move back towards the dollar as well. And this is sort of coming on the back of news that despite the fact that Vladimir Putin is sort of pulling back on his rhetoric and moving away from his demands for the referendum to go ahead in eastern Ukraine, it looks like the regional referendum is still going to go ahead with all the printing of the ballots seeming to happen, and on Sunday it looks like that referendum will be taking place. Now this suggests that uncertainty in the region remains significant, and the moves from Putin have not really done a great deal to calm the tensions, and it looks like the groundswell in the pro-Russian movement is continuing in Ukraine. So just investors are slightly concerned on the back of that, and that's what we're seeing at the moment. These indices, Wall Street indices were pretty much flat to slightly lower overnight, and Asian markets were also fairly mixed as well. Asian markets had Chinese inflation to cope with. Chinese inflation came in slightly down on the 2.0% that had been forecast. 1.8% was the result, and that sort of as a twofold impact on the market. First of all, it does give the People's Bank of China further room to engage in some sort of monetary easing. So that would be considered to be a positive. But on the negative side, dropping inflation in China for a country that's growing at 7.5-8%, I think inflation at 1.8%, and that's down from 2.4% last month. So sharply dropping inflation does certainly create concerns of this ongoing disinflation and possible moves back towards maybe even deflation. So if you look also on the producer prices side, that came in at down 2.0%, which was worse than the down 1.8% that had been forecast as well. So certainly moves into disinflation in China, and that will need to probably be counteracted by some sort of monetary easing at some stage. But that is a sort of a counterbalancing effect of the inflation data there. So Asian trading was fairly mixed, and we're now in the European session around about 0.2% down for the FTSE and the DAX, with the CAC off almost 0.5% in early trading. The data that we're looking at for today, not a huge amount that we've got on the agenda. Look here. This is the dollar index, which has pulled up slightly, as I said, with a slight amount of dollar support that was going on here. That we've seen today. But as I said, the data that we're looking out for, first of all, we're looking for 9:30 UK time. We've got UK manufacturing production, and that's forecast to drop slightly to 2.9% on the year, and that's slightly lower than 3.8%, but certainly you'd say that you're still on an upward trajectory there, and the manufacturing production is still very positive. Other announcements, the only other really thing is Canadian unemployment forecast to come in again at 6.9%, so that's similar to previous months, and it stays on that downward trajectory. So nice declining unemployment there in Canada, but that's at 1.30, and that's only the real economic announcements that we've got to focus on. Other than that, we're probably just focusing on news flow from Ukraine as to how this referendum may pan out. So that's probably the thing that's driving investments today. My chart of the day is the DAX. I haven't talked about the DAX this week, so I thought I'd give it a go. And certainly this is the DAX over the past 3 weeks. We've had this trading range form between about 9,400 and up towards 9,645. And you'll see that I'll highlight here the Fibonacci levels. 9412 is the 38.2% run of that 8913 up to 9721, and that comes in at 9412. So it seems as though that is where this the bottom of this trading band comes in, and I'll show you in a minute how that is affecting on the intraday level. But certainly it looks at the moment with trading above these moving averages, momentum indicators on the bullish side of neutral. It looks like the DAX is wanting to have a consistent challenge of this 9645 resistance, and it looks like dips are being bought into, certainly on the intraday level. Here we've got intraday zoomed in slightly closer. This is that trading range that I was talking about. You've got a series of higher lows in place now, and the dip early on today has formed support around that previous breakout level, and it's also again on the intraday hourly chart trading above all the moving averages, and momentum indicators all in positive configuration. So I think corrections are being used as a chance to buy on this DAX chart. Here is that 9412 level that I've highlighted, and it looks like the lows of this trading band continue to use that Fibonacci level as the basis of support, and I think corrections are being used as a chance to buy, and that would suggest that we're going to get continued pressure on this 9645 level. So you got the key low within the band, or the initial key low is 9488. So it's around about 100 pips back from where it is at the moment, which is around about % for the DAX. So not a huge amount of downside that we could see back for that key low, but I think anything back towards the I'll get the crosshair up, anything back towards this 9550 area, I think seems to be a fairly decent basis of support. Historically, actually going back 9550 seems to be a fairly interesting level that continues to be used. So you could possibly be factoring that in as a potential buying opportunity there. But anyway, I wish you good luck in your trading on the DAX today, and I will speak to you later. Thank you.